Yes, hello and good morning, everyone. Let's talk about the trade review for the third quarter of 2023. Start with an overview. Here, I have listed our open trades for you. There's the oil deal, the CBOE volatility deal, and the Treasury bond safety deal. You can see the ticker symbols here: CL, VIX, and TLT, as well as the start date and end date. In the oil deal, you can see we'll be cashing in very soon, on November 15th. The CBOE deal will be cashed in before Christmas on December 19th. As you can see, the TLT deal will run a bit longer. Why? I'll tell you in a moment. Here are the expected profits for you: 100%, 25%, 40%. And of course, those are still running. We haven't made any changes to them yet. We'll start with our first deal, the 100% oil deal. I've brought along the 3-month chart of the underlying, the oil futures, for you to see. Here, you can observe a steady upward trend. This is not surprising given the ongoing conflict in Ukraine. It's no wonder that the oil price is holding relatively well up there. That was to be expected. Let me show you the 1-year chart, a bit longer. Here as well, you can see that we've touched the lower points here around $66, 1, 2, 3, 4, 5 times, and successfully defended the support. After that, the oil price started to rise. It's a textbook example. Now, let's talk about our trade. I've marked the profit barrier for you. It's the green line you see down here. Take note of how low this line is. You make profits above this green line, as indicated by the green arrow. This means that the price can be here, here, or even here. In principle, the oil price could plummet down to this level, and you would still make a 100% profit. The black line you see, the vertical line, shows you approximately where this trade will be cashed in. There's only a small time frame left, and then you can already take your profit. It's a relatively secure deal. Therefore, as a conclusion to this deal, everything is going according to plan. The profit barrier is far away from being considered risky. Our safety buffer is extremely high. Our deal will be cashed in very soon, on November 15th. The cashing in process is very straightforward. You don't need to do anything. I'm not kidding. You really don't need to do anything. Everything happens automatically. So, at this point, it's safe to say congratulations on the 100% profit. And let's not forget, in very uncertain times, who else has this? This has already been a very good deal. Let's move on to our second trade, which is the CBOE volatility 25% safety deal. Here again, I have the underlying, the VIX index, presented as a chart over 3 months. Here at the bottom, you can see the lows at 12.5, indicating very low volatility. Due to the uncertainty of the recent weeks and months, it naturally increased. Currently, we are standing at 21. Whether this is dangerous or not, you will see shortly. Our deal is relatively safe again, but I'll show you that in just a moment. Here's the 1-year chart showing a maximum around, what are these levels? 25, 26, 15, something like that in a year. And the lowest volatility is down here at around 12.5. Let's talk about our profit barrier, because now things get exciting. What do we see here? Miraculously, our green profit line is up here, and this time, we win as long as the trade ends below this barrier. We earn a solid 25% if the VIX is below this level on December 19th, definitely before Christmas. So, things are looking very promising. Keep in mind, this is a 1-year chart. Exactly, here too, we can say that the volatility 25% safety deal, everything is going as planned. The profit barrier is still far away. Our safety zone is very large. It'll be cashed out in on December 19th. Again, no action is required. Everything happens automatically. All of this in very uncertain times. Let's move on to our third deal, the Treasury bond 40% deal. Here we have the underlying, the iShares 20+ year Treasury bond ETF, and here is the 1-year chart I've brought for you. You can see the 110 mark at the top and our profit mark around 84, 85, 83 at the bottom. You can see how much it has retraced. That's because interest rates have surged significantly. Here we can see the Treasury bond chart for the past 5 years. You can see that in 2020, it even reached 170. Now it's at 85, which is half of that. It's quite remarkable, especially in the bond market. But as you also notice, it's still very low. And when we look at our profit boundary, it's down there, so there's still a long way to go before any losses occur. No, everything still looks very good. We anticipated that within a certain, let's say, contingency range, there's indeed a chance, or rather a risk, that interest rates might rise even further. For this reason, I've taken the following step and extended the trade until June 24th. You can see it marked by the black line. This deal will only be settled in June 2024. So there's no need to worry. We still have plenty of time, and within this period, both CPI inflation and PPI inflation should decrease. That's likely to happen. The yields in Treasury bonds are excessively high. The CPI and PPI are expected to come down. We specifically created this long duration to bridge contingencies. We achieved that with this deal. And the profit barrier, even now, if today were the closing point, is at a level where profit starts. So, even in these extremes, in this extreme situation, the deal will not be cashed in until June 21st, and there's ample time. If things continue to change, for example, if they actually rise further in the coming years, then it's not a problem at all. We have enough time to adjust this trade accordingly. So, let's summarize our safety deals. Everything is going according to plan. We will be cashing in on significant profits for all our trades. 2 of these profits will come before Christmas, and there are new deals in the pipeline. However, the current uncertainty lingering in the markets doesn't force us into trading. This is crucial. We will never recommend or provide deals to you unless we fully stand behind them at 100%. That's our unique selling proposition, or USP. This approach has led us to not be forced into trades. We only make trades that are successful, and we have a 100% success rate since we started, approximately 4 years ago. This definitely proves that we're doing it right. I wish you all the best with your trades, including the upcoming ones. Thank you very much, and please feel free to reach out to us if you have any questions. Thank you for your attention. Have a great day, and we'll see you in the next video.